I think when you get the real unlock of the United States economy and you get the real institutional money flowing in, I think it's just hard to predict some of the upside opportunity.
What's up, guys? Kevin Cage here, back with another crypto update. We got a bunch to go over today. So that clip was Ripple CEO shared by Good Morning Crypto, in quotes, "When institutional money comes in, it's hard to predict how the upside will be." And I know Brad Garlinghouse is sticking to his $5 trillion crypto market cap prediction by the end of 2024. So time is ticking, and at this point, we just want to see price action. Next up, we can see shared by Watcher Guru, BlackRock now holds over 304,000 Bitcoin worth over $21 billion for their spot Bitcoin ETF. So friendly reminder, this isn't BlackRock's money per se, this is their clients, but this is still a lot. So we can see 21 billion, and we went over predictions previously of 50 billion to even $220 billion in net inflows for the Bitcoin spot ETF. You can see Altcoin Daily sharing almost 5% of the entire Bitcoin supply is in the ETFs. 34 ETFs control over 1 million Bitcoin. And that's just for Bitcoin, the largest asset in the space. We've yet to see how much inflow will come to the Ethereum spot ETFs as well, and then future alt ETFs, which are likely coming. On 21shares.com, you can see some examples of ETP's exchange-traded products for different altcoins today, like Solana, over $981 million in AUM. We can go to Ethereum. We can see XRP, 54 million, ADA, 43 million, etc. Mainly because the Ethereum spot ETFs were approved, I believe it's just a matter of time for other alt spot ETFs to be approved in the top 10, top 20, and then working their way down. Even Robert Mitchnick, head of digital assets over at BlackRock, we shared a clip before, he basically said there are 3 other investable assets that are alts for spot ETFs. Could it be Solana, XRP, ADA, DOT, AVAX, etc.? We also have Dr. Martin, head of research over at Uphold. The European alternative ETPs, our exchange-traded products, are finally coming. Originally planned for the start of the year, Valor is bringing altcoins to the Frankfurt Stock Exchange. We start with Hedera. So we shared an invite to the launch in German below. Very interesting to see more ETPs, and it blows my mind, at least last time I checked, that HBAR is still not listed on Kraken because I've seen them collaborate with a bunch of things. So at this point, looking at the Bitcoin price chart, being bored, waiting for the next cycle to potentially begin to draw major moves and all-time highs, we understand we need liquidity to enter the market. So how can liquidity enter the market? We've gone through RAL's total liquidity index lined up with Bitcoin over the past several cycles and showing liquidity enters and Bitcoin goes to 6 figures, maybe multiple 6 figures. But how can liquidity enter the crypto asset class? Will it be similar to last cycle or be a bit different? Because last cycle, there was QE and interest rate cuts. My personal bet and guess based off of today's geopolitics is it could have some similarities to the previous cycles, but it's likely going to be really different. Last month, I posted a few bullet points of different ways that liquidity can enter the markets besides interest rates and QE. So if you want to pause the screen, hopefully you can read this and it's not too blurry, but there are plenty of other ways that liquidity can enter the system. And just knowing that we have elections later this year, I think we're going to be surprised. I think there's going to be a big push about decentralized identity and voting narratives and all types of things. And if you have any other ways that liquidity can enter the market that aren't listed here, I just threw together some bullet points, please let me know. Next up, I saw Bank XRP share that RippleX retweeted this for the XLR tweet discussing a $16 trillion opportunity for real-world assets, tagging Citi, Deutsche Bank, MasterCard, Northern Trust, etc. And we know that Ripple a while back partnered with the XLR Foundation to enhance the XRP ledger's interoperability across blockchains, connecting across 55 plus networks. And we know that regulatory changes can be a market catalyst as well, like deregulation or just capital requirement adjustments like the BIS is mentioned. So we can even see, shared by Rath Economin, MiCA's impact in the European Union on stablecoins. So we've talked about the MiCA framework in detail in previous videos, but this asset class is being regulated and will be regulated. And I know that many of us believe that one of the biggest bull runs in history, or to have that potential, would be regulatory based, so some type of regulatory catalyst. We're going to listen to this 30-second clip shared by digital asset investor of the CFTC chairman.
As defined by current law, we have commodity tokens, we have security tokens, and what we've experienced at the CFTC now for over a decade is this gap in regulation where we don't have tools to regulate the market, and it's leaving a pretty significant chunk of the market unregulated. So when you look at commodity tokens like Bitcoin and Ether, you're talking about 60% of the entire market cap of the crypto market. And with that in mind, I think we have a serious issue in terms of filling that gap, and this is what this legislation sort of achieves.
So the CFTC chairman goes on to say that Bitcoin and Ethereum are commodities. That is about 60% of the entire crypto asset class, with 40% not really regulated whatsoever. And you could easily argue, are Bitcoin and Ethereum even regulated? How much regulation do we really have put in place? And to be clear, do I want KYC regulation? No, but are we going to likely have it? To some degree, yes. But going through regulation, it's a nail biter because we want positive regulations. We don't want regulatory overreach like the SEC. We have right here the US Senate crackdown on crypto, a provision requiring the crypto industry to identify users to avoid sanctions. So we're still early days, and it will absolutely blow my mind if there are actually arguments about the right to self-custody. Everybody should have the right to self-custody their own assets. There shouldn't be any transaction limits or anything. In just my opinion, the crypto asset class reaching multiple trillions of dollars isn't going anywhere. There are so many investments, there's infrastructure being built, and we're working on regulation. And there are other jurisdictions or areas like Dubai with the blockchain strategy. So I know this is a while back, but there are other areas moving ahead to digitize all documents to completely run on blockchain. So we know a bunch of centralized companies and organizations today, they're threatened by DeFi, but I actually think that DeFi can enable a lot, and they're excited for credit risk assessment and just true automation with smart contracts. The question is, how do you regulate it? And then of course this leads to DIDs and decentralized identifiers. There's just so many other things that need to be thought out and then regulated. But we're seeing decentralized identifiers, zero-knowledge proofs, all types of things, scaling solutions implemented on a bunch of networks today. Just saw this by Cointelegraph. Ripple partners with the National Bank of Georgia to digitize their economy. So we're well aware of their collaboration, but we actually can see they just announced their meeting in a LinkedIn post 2 days ago. So you can go right to the LinkedIn post if you want to check it out for yourselves and just see James Wallace. He is Ripple's VP of Central Bank Engagements. I also saw shared by a senior software engineer over at RippleX, excited for the release of XLS70D, on-chain verifiable credentials. This is great for certifications and compliance, unlocking the potential for a new wave of trust-based applications within the XRPL. So this is linked right to the GitHub. We can see the XRPL DID, Amendment XLS40, and then discussing here the on-chain credentials. For example, financial institutions can issue verifiable credentials on the XRP ledger, attesting to a user's identity and compliance. This eliminates the need for repeated KYC or Know Your Customer checks across different platforms. Also looking at the Casper Association GitHub, we can see Juliet down below. Under the repositories, we can type in Condor, and we can see that Condor has been added. So that is the Condor upgrade, also known as Casper 2.0. We also have this website right here, Equity Bricks. It is BRIX. I believe this is the company that is Seattle-based that the Casper Lab CTO mentioned in a Twitter Spaces that should be launching on Casper. So this is the real estate tokenization company, so keeping tabs on this. I saw Good Morning Crypto share that we have Ripple and Stellar and the US Treasury, so they joined a roundtable discussion over here with the Secretary for Domestic Finance at the US Treasury Department in DC just back in April. So if you've researched Ripple, Stellar, or even just the blockchain space for years, this isn't anything new. We know that they're sitting with a lot of big names. They delved into integrating CBDCs, tokenization, and stablecoins into the US financial ecosystem. So the connection of Web3 with traditional finance, we almost need like Web 2.5 bridging applications. And there are plenty of other assets with huge connections, so my bad if I don't name every single asset. XTC and trade finance, WTK with their connections in the Middle East, all types of things. Even XDC, from the bottom of the weekly candle bodies in 2019 to the top of the bull run, this did 44,000%. So at least from those lows, over a 400x, so it did a 100x multiple times. Since then, we crashed like most assets 90%, similar to QNT, and we are just running sideways. I believe XDC is legitimate and working on a lot of things. We're just ranging. It doesn't mean the asset is bad, it is just what the entire market is doing. When Bitcoin dumps, or when it dumps, when Bitcoin dominance climbs, alts get smashed. So this is just a waiting game in my opinion. I mean, it's all noise until we see Bitcoin draw major moves and all-time highs and actually get confirmation that the next cycle begins and liquidity enters. And we know it can happen fast in markets right when sentiment gets really low, provided Bitcoin stays above 58,000 at the 8-month EMA, it looks fine. We just don't know how long we're going to range. So if you don't believe in the crypto asset class or multiple cycles, that's fine, but this is something that I think everybody should at least have an open mind to. Is the potential when the monthly RSI pierces 70 and goes on the big run like we've seen for the last 3 times over the past 10 years. So for those of us that are already positioned or DCing into alts more at their lows, we're just twiddling our thumbs and waiting for positive price action. I think having the mindset, I'll believe it when I see it, is completely fine. Just be aware of the potential. I also saw Tokenizer make this great post highlighting Actis. So Actis, think tokenized asset messaging, rather than ISO 222, which is financial messaging. So we know Actis is the standard used by 98% of all financial contracts in the world, of $50 trillion market opportunity for the total addressable market. and that was shared by the CEO of Nucleus Finance, formerly at Goldman Sachs. So last month, the Actis conference, solely sponsored by Casper, we saw governments and private sector leaders from the US and the UK. Now we're seeing a senior advisor for the ECB, the European Central Bank, speaking on the future of Actis, DLT interoperability, and the tokenization of securities. We've shared previously, this is everything. There are just over 30 plus different types of smart contracts that are programmed with Actis that can account for every single type of financial contract. Just like Tokenizer says, from mortgages to derivatives to loans, credit, bonds, payment plans, cash flow, etc. So this is one of the biggest use cases I've seen in the crypto asset class. Having the mindset, I'll believe it when I see it, and actually see mainnet deployments is completely fine, but the fact that the ECB is speaking on the future of Actis with DLT interoperability is really big, because the tokenization of securities and everything else is happening today. And I find it really interesting knowing that Casper can be public, private, or hybrid, but I want to see some activity, because getting this launched and having first mover advantage in this space is everything. So we'll dive into some recent Hedera news in some of the next videos, because there's a bunch going on, and we already covered the Bitcoin dominance, Bitcoin price chart, and altcoin relationship and how those fluctuate. So hopefully we don't get another situation with Bitcoin dominance like we witnessed in April with Bitcoin's price, but it's really just a waiting game. Alright, last but not least, I thought this was really interesting and I wanted to highlight it, these smart wallets that Coinbase is putting out having to do with passkeys. So we have Panos, a really smart guy in this space, and he put out a really good post highlighting passkeys. Passkeys are the next step in a more secure, easier, and passwordless and seedless future, no seed phrases. A future without phishing and compromised private keys, losing your crypto secret words or numbers, or forgetting passwords. We can see right here that passkeys are a replacement for passwords that provide faster, easier, and more secure sign-ins into websites and applications across a user's device. Unlike passwords, passkeys are always strong and phishing resistant. Now, why am I talking about this? Because this could be huge for the future of Web3 enterprise adoption, even retail adoption, making it easier. So these passkeys or passwordless account logins are created and validated by an encrypted process on your device. This removes the possibility of creating a weak password, and as the part that's required for verification, also known as the private key, is not valuable to hackers, it makes them significantly more secure than passwords. Passkeys carry an added layer of security that makes a user only be able to access passkeys for a given domain or application. So a passkey created on a specific application cannot be accessed nor used on a different domain or application that attempts to look like it by scammers that want to phish you. So this gets rid of phishing. So that's a really compelling point about passkeys being much more secure than passwords. We can see big tech companies, Apple, Google, Microsoft, even Coinbase, and some Web3 projects and exchanges have already started transitioning to this standard. So we linked this FidoAlliance.org/passkeys for more information if you guys want to check this out. We can see Coinbase right here. The wait is over. Smart wallets are here. Introducing the smart wallet. This is how 1 billion people come on chain. Say goodbye to seed phrases. They were too long and too hard. And say hello to passkeys. So really interesting. So I think the introduction of passkeys could be a really big thing for the crypto asset class, for enterprise partners, for retail investors, just keeping it super simple. And I'm sure many people already use passkeys today, but the ability to do this with your wallet and no need to back up your private keys, and it's completely phishing resistant, is really nice. So if this is still accurate, we can see you can use it in testnet with mainnet coming soon. The future of passkeys will be interesting, even the DREC Alliance, but that is still ways away. So there are millions of people, myself included. I have a bunch of private keys, 12, 24 words that I store. So in the meantime, just make sure you have multiple backups of your private keys. That is super important, not just on a piece of paper. It's better if it's in maybe a safety deposit box, but just the more the merrier. Some ways to back up your keys include an encrypted USB drive. You could do a secure cloud storage with two-factor authentication using a security key as an additional layer. Some people use a password manager, but you have to make sure that the initial password and the actual code is safe for the password manager. Or a steel plate backup, like a metal plate that has no digital footprint whatsoever. And there's no right way, there's just your way. The more the merrier, even if you do multiple of these and just have multiple backups. And there are pros and cons to each of these, so you really just have to decide. I'm a fan of this Arc Plate Guardian. This is a stainless steel plate that we've talked about before, so I actually just set up 3 of these a few days ago. So you can make divots in this metal to put in your seed phrase entirely. This is fireproof, waterproof, etc. And one main benefit about this is this has no digital footprint, so I don't have to worry about malware, any type of hack or breaches. So I know many of you already know about the Arc Plate working with the XRP Ledger Foundation, with Gala, with Hashpack, etc., but just wanted to share. I'll leave this linked in the top of the YouTube video description. I hope you guys enjoyed today's video. Big thanks to all that hit the like button, and I will catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.